right. So bear with me this time as we have changed the setup just a little bit here. Try to do a few things under the hood to sort of eliminate part of the lag and try to get some more response out of the screen and the charts. So this will be a bit of a test at the same time, also with the music. Could be having some issues with that as well. So, you know, growing pains, you know what I'm saying? If you're with me with that, then you know what I'm talking about. All right, what we do want to look at is one thing, and I sort of failed to get that ready for you, so my bad. We are gonna check something out real quick here. We want to take a look at some of the moves that have happened in the last week, but just not on Bitcoin, right? So we know Bitcoin's had a relatively slow week. What we do want to do is check out some alts that were moving, that did move fairly well, and we want to get an idea of what we've seen out there. So yeah, you gotta, sorry, all this should have been pre-set up, so I apologize for that. And of course things are just going to take 5,000 times longer than they need to take, and I'm not going to go ahead and log in. Joe, boy, everything is wrong. Everything's wrong. Yeah, so you get to watch me set this up real quick. If you're unfamiliar with CoinCheck, you might as well, you know, while we're here. If you're unfamiliar with CoinCheckup, it is pretty cool. I've used it in place of CoinMarketCap for some time, not exclusively. I still go to CoinMarketCap for market information, but I do like the way CoinCheckup does some things here. What I do like doing is I like adding the 7-day. I like adding all of these. This gives me a better picture on what's going on across the board. Of course, that wasn't supposed to happen. That wasn't supposed to happen at all. So we're gonna do that again, and that's on me. All right, so nothing shouldn't happen. Shouldn't also happen to you. That would be really weird. Basically, that would be very strange. Come on now. Come on now. Come on now. It seems that streaming and doing anything is just a giant tax on resources. And now I just don't know. I just don't know what's happening. It's killing me. It's killing me. It's nothing but problems. Well, we could look at current 24-hour changes. We got Tron still moving up, has been for quite some time. What else we got here? Any big moves? Daily hot is still cruising. Look at that little chart right there. Boom. Hot's cruising 15. Now it has made its BTC pairing all-time high. It has not made its USD pairing all-time high, which I believe was, I want to say it was somewhere around 23 to 25 cents ballpark. 3% move on Zilliqa, upward direction, 25% move on Pundi and PXS. 10% down on Revain. I'm not 100% familiar with that project. Let's see. We got a 3% move, or we got a 5% move down on Status. 4.5 up on Aurora. Aurora, I believe, is staking for IDEX, I believe. 841 up. Oh, okay. And things have happened. Yeah. So we're not gonna waste any more time on this issue that is currently happening here, because we're just not going to do that. All right, time is far too valuable to be wasting on things that don't work. Right, so we readdress those things next time we stream, and hopefully we get them all fixed. And you know, that's good. That gives me a gigantic list of more things that I need to do later. So, going back to the weekly candle close, we can see here 1/27/2019 weekly candle close. We can get rid of this now. We don't really need that. So we're about to close the 4th week in the month. So therefore the monthly candle close obviously is not going to happen on a Sunday. Our monthly candle close is going to end on Thursday. That'll be the 31st, and February 1st would be the newest monthly candle, and that'll be happening on Friday. So we'll get that over here, February 1st, boom. Okay. So as far as monthly candles, we still have a few days of trading left in there. This is relatively non-exciting. This particular candle here, rejection to the upside, not so much rejection on the downside, which could be trying to paint itself something similar to a gravestone, although a gravestone would be typically at the top of an uptrend. It's in the ballpark of an inverted hammer. I mean, kind of. Some people might call it a doji. Well, we shall see. It could be a bullish indication that the attempt was made down low. It was protected fairly well. A push came up top. There was a lot of selling, so we're sort of indecision, stuck in the middle there. On the weekly, which is what we're closing in now, 2 minutes. Let's zoom this in a little bit more. So for the weekly, we have very little trading. This is what we were talking about the other night. I think we were at $14.50 or something in that ballpark. Now we are currently looking at, what is this, a change of $4? Is that right? That's what it says. Yeah, so minus 0.11%. Whoa, now hold on. Yep. Yeah, about the same. So a loss of about $4 in the week. Open to close is pretty boring. It's why I wanted to bring up the other chart to look at some weekly explosions we've had. But we did see a few of them. We only saw them on the 24th. Hot has been moving. Tron has been moving. NPXS has been up and down, but the swings in a 24-hour period are kind of between like a 12 and a 20%. So things have been happening down there. Yeah. So anyway, weekly extremely boring. Daily we could see. So we go back to, that should be the 21st here. Is that correct? Let's double check this. Well, of course, yeah. Well, things froze. Problems. Okay, anyway. So January 21st. You can see where the candle opened up top right here. And you can see where we're about to close right here, and that is why the weekly is not giving us much from that 7-day range. Not a whole lot is going on here. Okay, so the top of this candle, the bottom of this candle, the difference, very little. We can read that, or at least try to read it. Come on now. Here we go. Okay, so minus $7.50. So obviously some more selling came in. We're at 0.21% down, and we should have just flipped our candle. Is it 6 o'clock? And not so much, not yet. Oh, is it painting? Yes. Okay, we have officially painted our weekly candle. So now that our candle has closed, we could talk about it in a little bit more detail here. Official on the books record is minus $7.50 for the week, which equates to minus 0.21%. So, yes, very boring. I totally understand. Let's follow the last 7 days, candle by candle, and see what happened here. Prior to the week opening, we had a pretty significant dump. This is on the daily chart, about 4%, 150 bucks down. Okay, 146.50 if you want to be super accurate. This was an important candle because it hit resistance up top and found support down below, and all that happened inside of 1 day of trading. Very similar to this day of trading. Okay, from there we hung out. If we were to cut this range in half, let's say 35.95, so ballpark, well, we're gonna call this yeah, we'll go the top of the range here, so 35, and we'll go to the bottom of the range here, 36, so we'll call that like 175 bucks or so. Stayed on the lower half the whole week. All right, and what we did gain during the week up here, we gave back pretty quickly, gained it back again, lost a little bit more, lost a little bit more, and then lost a majority today. So between the, let's see, this would be Sunday, Monday, so between the Tuesday candle and the Sunday candle is where a huge chunk happened. In between that, very little, very little. We tested support, we tested resistance, and back down here we tested support again. So dropping back down here, the low on this candle was pretty significant, 34.62. Okay, we did see a low in this candle that was 34.50. all right, so that was a pretty decent low that popped in there. Now sure, it's significant only to this range where 31.21, at least on the MEX chart, was the low that we got for 2018. All right, the 2018 all-time low, 31.21. So pretty far away from that as we speak, although that is still currently projected on some charts, or at least as a it has been analyzed to make its way back down there for a retest, 31.21, and then a push to about 29 in that ballpark. And that's basically, that's off of this weekly chart. Okay, so I mean, you can see the monthly chart right here. You can see this line that's been drawn. That's at 29.39. If you take the weekly chart back and you look at some swing highs, so this guy right here is where you're looking at 29, right? So 29.39 in that ballpark, and that's an adjustable range, because on the weekly that's not a specific, it's not a specific level. All right, the level you would want would be the close of this high right here. So this candle closed 29.94, and that was the highest we approached. So at the time it would have been an all-time high, and then we swung down low. This is where you're getting some other people that are chiming in with the 1900 levels. Okay, so this area of historical data is what's relevant to the current trading. You can see here the trading right here is this green line. This is where we're currently at, and these are testing levels that were previously tested earlier. All right, but the historical data that gets people to 29 is right here, and gets people to 1900 is right here, 1924 ballpark. The actual low of that candle was 1810. So there are charts that do chart it down to the actual wick on that. This is a weekly chart, so you remember you got days, you got 7 days worth of trading inside of just this one candle. So although that wick may seem insignificant on a weekly, it could very much be this. It could very much be a few days ranging right in that zone. But on the weekly chart, you might just see a large wick or a spike. Same thing as if we go down here into a 4-hour. Obviously this looks like a lot more trading going on, but over here you just see this giant wick. Over here you had trading up to this point over here, and then a wick. Okay, and that's on the 4-hour. So that about breaks down the weekly. We would be looking at a few different things here. I mean, wanna call this a hammer. True to form, it would be a hammer. This would be a bullish pattern. This hammer comes down here, so basically it pushed down. My buyers came back in to defend that support level, pushed it back up, and stopped the bleeding. So they absorbed all the selling that was coming in there. Even though it's a bearish candle, bearish looking candle, it's still a bullish indicator. So this would indicate, you know, bullish activity if they are to maintain the momentum and bring in more volume in order to continue to push and push and push. In which case, the sellers at that point would need to absorb any more of the buying that's going on in order to protect their resistance level. So it's a non-stop game of tug of war, and it comes down to you know, who wants it more and how many transactions they could get in there, who's pushing it that direction. So we started this daily candle bearish, and you saw that it pushed down a little bit. Now it's basically dead even, so I mean, it looks like, well, it looks like the buyers have come in for now, temporarily. We'll see again on the, you know, on the 4-hour chart. It's a little bit easier to see, but yeah. So we're gonna ride out the week. All right. For the bearish side of things, they would need to get on the other side of this support leg. All these wicks, right? This is all buying, 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 buying. It's all buying, right? So on the bearish side, they would need to push the selling further and further forward and close somewhere underneath these wicks. This one, we could call that as the most extreme point, so somewhere in the 33.98 zone. For a little bit more conservative, you'd be looking 34.51, give or take. On the bullish side of things, you need to get back through this range, which we've seen has not been a problem. Get past through the range, and then you want to close up above this support leg here. So on the conservative side of things, you'd be closing ballpark 37.16. On the more aggressive, you would want to be closing 37.90. So that's the larger range you would be looking for to get out of this range. All right, to get trading out of this zone. All right, we want to see something either above this resistance or below this support, and then we can at least see what kind of trading we have going from there and start setting out our next targets. Inside the range, there's not too much to do but play the range. So, you know, clearly just on the 4-hour chart, you know, every time you got up to the red, if you went short, you know, you might have been okay. Let's say you shorted right here, you're in the red, you short, get to the green, you buy, you would have been good. Red, you short, didn't make it to the green. Let's say you stayed in it. Right here, you probably would have gotten stopped out, so that's not a good trade. If you took it again over here, that would have been an okay trade. You would have went long over here. That would have been a good trade because you would have been out over there. So you can play the range. It is difficult, but you would have had one failed trade and what, like 3 good trades. So it is possible. You just never know when the range is gonna end. You don't know when the range will stop ranging, and as crazy as that sounds, when the range will actually stop being a range and make its push out of the range, just as we could see, you know, in the daily chart above over here. You know, we didn't put the little boxes up, but this was also a range for a while. Follow that white line and you'll see the range that it played. This would be the upper portion of the range, and this was the lower portion of the range. Okay, during these days, you were in that long zone for a while trying to go short. You would have sold, and then you would have went long, and you would have waited days and days and days, almost got, you know, right back to your entry, and only over here would you have been able to sell it and go short, and then you would have taken this candle down. Except in that trade, if you're playing the range, you would have gotten out over here and went long, Instead, the candle kept going down. So that would have been a failed trade right there. All right, now that's daily swings too. So if you're looking for shorter term stuff, you'd be scalping over like a 1, 5, 15-minute chart. If you're looking for intraday stuff, you could be on the 1 hour to 4 hour, something similar to this. But daily swing range trades, you'd be able to play that just like on the 4 hour, you'd be playing these. These could also be multi-day. In fact, this would have been multi-day. You would have taken a long over here at let's see, January 20th, and you wouldn't have gone out. You only would have gone out if you front run this a little bit, which would be a suggestion for most traders. And that would have been the 26th. So you would have been in that trade for 6 days. But it would have been a profitable trade. All right. Basically, you would have gotten in 35.08. You would have gotten out 36.75. So that's not bad. It's not bad at all. But again, risky nonetheless. Range trade. You never truly know when you're going to get out of that range. You do want to see certain indications such as volume increasing, patterns forming, possibly like a symmetrical triangle or a falling wedge or something that'll give you some type of indication that there could be a breakout. Here, there's not a whole lot to look at. You might have a descending triangle here if you eliminate that wick, sort of played this level part down here and then had the rise up. So this could be a potential pattern, but you sort of have to craft it to your own desires because of this wick right here. So some will chart wicks, some won't. Let's say, let's just say for ha-has, we did something like this, and I'll fix this in a minute, but let's say we did this, and might have to bring that, I'd like to bring that down a little actually, so try to capture some of those so it makes a little bit more sense here. Yeah, so it's sort of, you're sort of customizing it at this point. You're eliminating this wick and the partial of that wick and all of those wicks in order to conform it to the way you want to. And if you gotta muscle around with it that much, it's probably not a very good pattern. That's my opinion. If we were to bring this, let's say, down enough so that we were able to capture all of the data, let's see, so we'd be down here like this. You get your second touch over here. Now at this point you've already drawn your pattern, so that breakout wick right there would have to stay. Okay. So the reason this breakout stays is because you would have already drawn the pattern from this candle to this candle. Alright, and then your confirmation touch would have been here. Of course, it did go for a breakout, but it didn't close up and over. First touch down here would be this guy. Your second touch would be this guy, and then you would have a pattern. All right, so we'd be looking at a symmetrical triangle. If this were the case, this breakout was a failed breakout attempt, so it could have been a stop hunt, which you then would think that there'd be, if you're stopping all of the shorts out, right, then you look for further downside. And then this candle here, though, like I just said, would be a bullish candle, or at least a bullish indication that we would be headed upwards. We're painting the next candle in here, so obviously we're running out of room altogether. Well, you can see how it looks now on the 4-hour chart. So this is on the daily, this is on the 4-hour, and you can clearly see the breakout was a bit of a fake out, right? Everything that you got, you immediately gave back. So it's allowable to be outside of the pattern. Trading, seeing this isn't a very good triangle. You like to see the triangle actually hit. You want to see something more along the lines of, let me get my little thing here, if I could, come on now. Okay, all right, that's yeah, that's what it's gonna be. well, I've officially lost my mind. There we go. Not that I'm drawing Elliott waves, but I just want to show you what a good pattern would look like. It would look similar to this. You know, you test the bottom, test the top, you test the bottom again,